UK wage growth remains strong, but is there signs that the labour market is cooling? Stay tuned to find out more. The strength of the UK labour market's been an important tailwind for the economy. Essentially what we're seeing at this point in time is the demand for workers actually outpace the supply which is available, and as a result you're seeing wage increases which are coming through. We've just had the latest read this morning on UK employment data, and essentially we're seeing wage growth excluding any bonuses increase by 6% in the 3 months to the end of April if we compare that to the same period last year. This is an uptick after you adjust for inflation of around 2.3%. So you've got wages which are growing at an accelerated rate above the current level of inflation. April, just to note, was an important month. It was a month in which we saw the national living wage increase across all age cohorts. If we look at those over the age of 21, we saw a 10% increase in terms of the national minimum wage there to £11.44. It's an important print. It may serve as a tailwind for the Conservatives who are trying to build a feel-good factor around the health of the UK economy at this point in time. But it may prove a challenge for the Bank of England, who are trying to bring inflation down to their target level. If we look at current inflation prints, we are 0.3% ahead of that target on a headline level. But it's the core inflation print which really matters. This strips out food and energy prices, and that's currently sitting 1.9% above target, and actually month on month it's trending higher. So that's an important one for us to monitor. If we look at what we're seeing in terms of the labour market data, one of the key aspects is we're seeing private sector wage growth actually start to ease a little bit, which may be encouraging for that inflation picture. But if we look under the bonnet at the data, what we're actually seeing is a fall in terms of full-time employment and a rise in terms of part-time employment as well. So we are starting to see some cooling take place within the private sector of the labour market there as well. In terms of the overall unemployment rate, what we saw was the unemployment rate actually ticked up by 0.1% to a current level of 4.4%. But just for context, 4.4% represents one of the lowest levels which we've seen over the last 50 years. So it's a very strong labour market in the UK. We're seeing wages which are growing faster than the level of inflation, and what we're seeing is a cooling but from a very high base. But there are some subtle dynamics occurring, particularly in the private sector, which we're monitoring very closely. If we look outside of the UK economy, yesterday it was a good day for the asset markets globally. We've got the US Federal Reserve who meet this week. Essentially, markets are expecting the Federal Reserve to hold interest rates at their current level, but we'll also see revision of the dot plots. The dot plots are expectations from voting members in terms of where they expect interest rates to sit in the US over the next 2, 3, 4 years and beyond. So they're quite an important development which we'll receive. We'll also get inflation data as well, which will help build out that picture in terms of the pathway of interest rates in the US. We've also got the Apple conference as well, where tech giants will meet and they'll discuss all things related to artificial intelligence and the future of technology. So quite a lot to look out for this week. So please do stay tuned with us each morning here on Morning Markets. Thank you for watching.